Hey, Boss Economics fam. Welcome back to the most unapologetically satirical and somehow factual economics program on the web, Boss Economics World, where we remind you that if you think things can't get worse, they probably will. We dig into the absurdity of government mismanagement, expose the structural cracks in the economy, and give you truth bombs disguised as entertainment. Why? Because comedy is the last refuge and your central bank is basically rolling dice at this point. Alright, fam, grab those popcorn buckets, or ramen noodles if you're feeling the pinch, cause today's topic is hot. We're talking about Australia in 2025 and trust me, you guys need to buckle up. Between stubbornly high interest rates, a looming election, cost of living explosions, and international headaches, let's just say the economic road ahead looks like it's paved over an active fault line. Australia has a national election due by May, but the real winners might be no one. A large part of the country's electorate is already groaning under the crippling weight of skyrocketing costs for, well, pretty much everything. Meanwhile, double-barrel economic threats, outlandish housing prices and an ongoing cost-of-living crisis, have fashioned the average Aussie's day-to-day experience into something that looks more and more like a dystopian nightmare. And if you thought Australia's problems were confined to the land down under, think again. You've got the global economy chiming in with lovely contributions, a new Trump administration in the US, because, you know, why let things cool off politically in the biggest economy in the world, right? And let's not forget the roller coaster known as China's economy, which is struggling like a shopping addict maxing out credit cards just to maintain its facade. So, yeah. It's not looking fantastic, folks. All of this turmoil has us asking, what does this mean for Australia leading up to and during 2025? You'll get the answer in tasty bite-sized chunks right here, without the arrogance of some posh banker from a leather chair in Sydney, sipping coffee that costs more than the average citizen's electricity bill for the month. Oh wait, we'll still give you those numbers, but with enough realism to hurt, just like your rent checks. Let's start with Australia's housing market. Now, remember when houses were for living in, not speculative commodities traded like Bitcoin in 2021? Good times, right? These days, housing prices in Australia are through the stratosphere and getaway treks to New Zealand for cheaper property prices have dried up too. This is now an existential issue, not a temporary glitch. Right now, median home prices in major cities like Sydney are hovering around 1.3 million Australian dollars. Even the smaller, supposedly affordable, cities are dancing in the same price ranges. According to CoreLogic, housing values nationwide rose by 9.3% in 2024, despite hopes that high interest rates would cool the market. What's worse? Renters aren't getting away easy either. Rental prices have surged by a record-breaking 11.9% year-on-year. The idea of rentvesting, where would-be homeowners rent and buy investments elsewhere, has become an overpriced band-aid. But now even rentvesting feels like one of those trendy ideas economists come up with while sipping overpriced lattes. And in today's environment, it's on life support. With key millennial cities like Sydney and Melbourne showing yawning gaps between incomes and property prices, affordability promises turn into cruel jokes. Consequently, salaries have barely budged, and home ownership is a fading dream for many. This problem has its origins in policies stretching back over 3 decades. You've got tax incentives like negative gearing, designed to promote investment, but let's be real, it's just a way to keep prices inflating for the few 100,000 Aussies lucky enough to already own property. The newcomers? They're competing with multi-home investors, offshore money, and institutional buyers. The Reserve Bank of Australia's idea of slapping high interest rates to cool down housing prices has done little beyond knocking out regular buyers and leaving cash-heavy investors playing Monopoly like it's their birthright. Let's take a hard look at interest rates, but don't expect any of that economist mumbo-jumbo, we'll make this digestible. The magic number, ladies and gentlemen, is 5%. That's the current cash rate in Australia as of January 2025. Before you reach for the pitchforks, let's break this down. The Reserve Bank of Australia, RBA, thought it'd cleverly hike interest rates to combat inflation, but they forgot one teensy issue: Aussies are up to their necks in debt. Household debt in Australia is at an astronomical 187% of disposable income, one of the highest in the developed world. Basically, for every $1 Australians make, they're technically already committed to paying back close to $2. This interest rate environment is just gasoline on the fire. Borrowing to buy essentials like housing, cars, or even managing day-to-day expenses on credit becomes an impossible juggling act. At this point, high interest rates are kneecapping consumers who are already juggling skyrocketing rent and groceries. Inflation, still stuck at around 6%, hasn't been tamed by the rising rates. High borrowing costs are just hammering businesses and consumers, and consumption, that lifeblood of every healthy economy, is shriveling up faster than a wool sweater in a dryer too long. Rebecca Jones asked the illustrious economist James McIntyre from Bloomberg Economics what all of this means for Australia next year. His response: Essentially, he's saying that the best-case scenario is some people will just shrivel up and take it. The worst-case scenario? A cascade of defaults, repossessions, and worsening inequality. But hey, the RBA insists it's playing the long game by strangling the short term. Economies are about sentiment and momentum. Problem is, when that sentiment becomes, crap, how do I pay my mortgage, stuff isn't moving the right way. Now, cost of living isn't just some academic phrase, this is about your grocery list, your utility bill, the new shoes you wanted, or maybe how you bought a quarter of the shoe because that's all the wage growth has afforded you over the past 5 years. If you're thinking, wow, this is bleak, congratulations. You've caught up with the rest of Australia. The Consumer Price Index, CPI, shows inflation stubbornly hanging out at around 6%. Foods like fresh produce, meats, and dairy products have become unaffordable luxuries. Even basic staples like bread climbed a whopping 8.5% in 2024, per the Australian Bureau of Statistics, ABS. But let's talk energy bills. That's where things get especially wild. In cities like Perth, electricity prices have jumped up to 30% year-on-year, while household gas prices have surged more than 20% in some regions. The impact of these price surges on real wages is nothing short of dramatic. According to ABS data, wage growth is lagging well behind inflation at 4.2% per year, which means real wages are in negative territory. Negative real wage growth, combined with Australians' record-high household debt, has created a deadly economic squeeze. These surging prices are eroding household savings, and it's pushing many middle-class Aussies closer to the precarious position of the poor. Around 19% of Australians reported skipping on meals to afford other essentials in 2024, according to a Finder.com survey. That is the grim new reality, sacrificial consumption. While Australians squirm under their domestic pressures, let's zoom out globally to question whether things will improve, or pass the misery right along. First up, because why the hell not, Donald Trump and global economic disruption round 2. With his second term beginning in the United States, oh, what a roller coaster ride democracy is, expect trade wars, insane economic volatility, and yes, even more sanctions on China. A renewed focus on decoupling the US-China economies is going to have reverberating impacts across the Aussie market. China is Australia's biggest trading partner, in case you live under one of Australia's many mined rocks. Now, what happens when your sugar daddy is dealing with a slowdown? China's GDP growth sputtered to 3.9% year-on-year as of Q4 2024, a disappointing figure considering Beijing's lofty growth goals. A weakened China translates to decreased demand for Aussie exports, namely iron ore and coal, the fuel behind Australia's trade surplus. This slump is already hitting corporate profits and government revenues alike. Where's the silver lining, you ask? It's buried under layers of geopolitical tension, climate disasters, and debt, oh, and did I mention debt? And, of course, there's the upcoming federal election hanging over Australia's head. The choices? Well, another round of familiar faces, familiar promises, and, wait for it, familiar governance that hasn't done squat for the average Aussie. From taxation policies that favor the wealthy to a lack of meaningful intervention in housing prices, both major parties have failed to deliver substantive economic relief over the past decade. What will likely be pitched during the election season are promises of affordable housing, boosting wage growth, and possibly tax reform, all of which are keywords for policies most voters are exhausted by hearing yet never see materialize. Key question to ask in 2025's election. Will anyone actually lower the cost of living? Or will Canberra remain obsessed with band-aid solutions? Don't hold your breath for any sweeping political heroism, history has taught us better. So, facing a recession as China wobbles, a debt time bomb, skyrocketing costs of living, and interest rates high enough to choke out consumer demand, Australia is teetering on the very edge of either a miraculous turnaround, or economic carnage. But hey, don't let that harsh your vibe too much. After all, asterisk economists have predicted 5 of the last 2 recessions, so, you never know, maybe the RBA will ride in with a rate cut by Christmas, or maybe we'll all wander into Mad Max territory. Either way, it'll make for a hell of a year. Be sure to like, subscribe, and share if you thought this economic breakdown turned doomsday laugh run was insightful. Stay sharp, question everything, especially politicians' economic promises, and remember we here at Boss Economics World will keep pulling back the curtain on all the absurdity the economic elites want you not to notice.